get started for this next session. So our next session will be talking about the importance of fintech collaboration as a platform to build a bank for the future. The banking sector is ever evolving, with the intersection between consumer, technology and financial services becoming more dominant. The importance of collaboration has never been more important. Presenting this session will be Nicola Burgess, who was appointed Chief Executive Officer of Data Action in 2019, and this session will be moderated by Cathy Lyall from Seed Space Venture Capital. Welcome, ladies.
Thanks very much. Thank you for being here today. So I'm just going to expand on Nicola's CV a little bit because she's had a really interesting and fascinating career.
Means I'm old.
Not at all. So you've kind of had three sectors to your career, haven't you? Sort of there was the whole property and building side of things, and then via an MBA at Cranfield in the UK, which is a very highly regarded university there, and a lot of stuff around focus on getting women onto boards and gender side of things, and then into British Telecom, BT, massive organisation. Then back here to Australia Post in a range of roles, always with that strong lens around the retail consumer and what you can do around that with data, and now as CEO of Data Action. So one of the things I've noticed with your career, and I've been Googling you a little bit, is you've got a real versatility as a leader, it seems, a lot of the things that you've been doing, and a real roll your sleeves up, getting things done attitude, which I think's really, really incredible, at the same time with a strong focus on the P&L and things like that. So what I was thinking is, why don't we just start with you telling us a little bit about Data Action to start with, and that journey to here now, because you've got that real focus on the retail customer and that lens that you bring to Data One strategy as far as putting customer at the centre of everything you do and how that works with your large corporate clients.
Thanks, Cathy, and thanks to the audience. I realise these sessions can be a bit monotonous, one after the other and after the other, and I'm between now and lunch probably, so bear with me. Thanks for that intro. I guess my background, the common thread is I started in building buildings, and more recently, or over the last 10, 15 years, it's been about building businesses. So that's the common thread, but always having customer or the buyer front of mind in terms of what you're creating. So very much that sort of creative thinking, making things happen is the common thread for me. So my journey to then get to Data Action as a business, so I'm not quite sure how many people are familiar with the business. I'll be honest, I didn't know anything about it, to be honest, when I got the call originally to put my hat in the ring. But we're a privately owned organisation. I liken ourselves to being a grown-up fintech. We've been going for 30 years. What we do is we support the alternative banking sector. So what I liken to as the good side of banking, particularly coming out of Hayne Commission and all those findings. So that really, what that means is the mutuals, the credit unions, the smaller banks, the second and third tier banks, I should say, who really are, to my mind, more focused on whether it's a customer, or in those terms they quite often use the term of as a customer, as a member-based organisation. So that's what we do. We provide the technology platform which enables people like you and I to transact, whether it's a day-to-day payment which might come through your mobile phone, or whether it might be putting in a loan application. That's the technology that is provided through those banks, and that's what we do. So if something like that doesn't work, it's not always our fault, and it's not often our fault, but that's the important role we play in terms of enabling the technology so those customer experiences happen at Data Action. Yeah.
Brilliant. So we've had several sessions here this morning sort of exploring the reinvention of bank partnerships, and we'll get to some of those later on, and how startups can actually successfully navigate those engagements with the large corporates. So I think we'd like to take this discussion a bit further about, our relationship with our money as individuals is changing dramatically, and the things we can do on our mobile phones, for instance, have raised our expectations of what we should be getting from our large financial institutions and corporates going forward. So what we get delivered by our banks and by our financial advisors is very much in the spotlight right now. And, and additionally, there's phenomenal amounts of data being collected and used and generated, and it's pretty mind-blowing, the size of that and what we could potentially do with that and how we enrich that for the customer experience, for instance, and how we keep that secure, really. And plus that ESG lens right now. And then if you look at Europe, where a lot of the neobanks and the open banking platforms, the digital-only banks, are really grabbing significant market share across savings, credit, loans, mortgages even, down the line. Now's the time really for our domestic institutions to be really looking at how they partner, or, build versus buy and all that kind of thing. So I think it's a really good time to have this conversation. So in your interactions with the large financial institutions and the challenges they're navigating right now, do you think they can flex right now? Because I've certainly got a slightly different lens, having spent 18 years in the UK, and maybe bring in the build versus buy considerations to that.
Yeah, it's a really interesting conundrum, and I think if we've not learnt anything through COVID, it's the importance of customer being the centre of it. So yeah, data's really important, but that only informs the customer and what the products and solutions need to look like with whatever interaction you might be having with your financial institution. So I think open banking in the UK is a key example of opening that data up in terms of what the different use cases should be. And I think not one bank can be all answers to everyone. And so therefore I think there's an enormous opportunity for the fintech community to play in that space. And I think we're seeing, a lot of the big banks are really struggling with that innovation agenda. There's so many things to navigate with, balance sheets, governance, risk and all the rest of it. That's all very important, but if you ignore innovation, that's also at your own peril. And I think a lot of them are really facing into that big time. And open banking will be a big bait and switch opportunity. It'll become much easier for consumers to switch between them. They already are, in terms of a lot of us have more than one bank account, for instance, for different uses. So I think that, and we're also seeing that with some real acquisition strategies playing out. So if you can't beat them, they're often trying to buy them. And I think we're seeing that with a few of the most recent transactions. We've seen CBA and Klarna, and most recently we've got, obviously 86 400 working with Ubank as well. And there'll be plenty more of that going on, but it has to be about the value of the customer and the data and that experience, which I think will drive a lot of that, and where the fintechs can really play.
So, I mean, in the fintech ecosystem, you would say that the cultures that evolved in the startups are often very different to the large financial institutions. So how do you go about picking your partners when you've scaled and you're doing well, and you've perhaps even starting to get a choice of who you are going to work with from a financial institution perspective? And how do you make sure that there's real alignment, not just on revenue goals, but on things like culture, values, ethics, things like that, which are certainly really key parts of an early fintech experience?
Well, I'm glad you mentioned that, because I think, like anything, when you're entering into any sort of partnership, it's a relationship. So you've got to be comfortable with not only the dollars and cents side of things, but what's the entry strategy, and indeed what's your exit strategy? A bit like a marriage, or indeed a divorce, if it happens that way. But get your prenup right in terms of where you are with an appropriate partner, so that you can work together. And I think it really has to be, values and culture has to play into the overall business case definition when you're considering who you're going to be working with. And that's certainly the approach that we take also as part of our organisation at DA, in terms of who we choose to partner with and what's the value you can co-create, bearing in mind there's enough room for everyone. So you've got to pick who you're going to partner with effectively to make that happen.
And then how do you make that happen in real life, right? Because there's a lot of intangibles around this, and that company culture is something that's just so valuable. And I just like, how do you overlay that? How do you not sully one, and how do you improve the other?
Well, it's not easy, and you do your business cases, you do your quants and so forth to work out what it could look like, but it's the soft skills, and I think it goes top to bottom and bottom to top in terms of where the culture is, and you've got to spend time together to really understand that, and spend time with end users to understand what they're saying about a potential partner and what they're saying in terms of sentiment around your own organisation, to see where there could be the synergies.
And is it an open discussion? Is it on the agenda right from the start? Because I know, like, when you're starting up and you're trying to get your business going, and it's all about revenue, cut costs, get your revenue, get your hockey stick, get going, and things like culture kind of come along for the ride unless you've got a really strong lens on it early. And often you can find yourself fixing issues at Series A and beyond. But in my experience, it's not often on the agenda very early on. So is it something that you put on the agenda once you're at that stage of scaling and you're getting into these partnerships? Do you make it part of those discussions, or is it still all about the money?
I would argue you need to make a really deliberate choice around this, and you put it on the agenda early, because it's almost a gotcha that catches you in the end if you don't have that very much front of mind in terms of that cultural alignment and the value piece as well. So it's possibly more the softer side in terms of a transaction, but equally as important, I think, in terms of where the potential can be realised.
Yeah, although I'd say a lot of the data that's around now, it's not the soft side, it's quite hard. It's good on the money side too, right? So just looking at the growing pains for businesses like this, if you, from a CapEx and OpEx perspective, what have you seen, and what sort of tools have you got in the toolbox to manage those?
Oh, I don't have a silver bullet. I'll declare that up front. But in my experience, when you're looking to scale a business, it's not always about thinking you are the only person or the only organisation who can invent it. And I think some of the smartest operators are those who scan the market and look at who they can partner with effectively. And another reflection in terms of working in the tech sector is typically tech organisations are full of really brilliant technologists who love to build stuff. And I love to build stuff too, so I get it. But that's not always the right answer. I think there's opportunities where you can get speed to market and speed to value creation by just putting your head above the parapet, understanding what's out there, and going and making those partnerships happen, and then trading that off in terms of what that means in terms of the CapEx, the seed capital, whatever you need in terms of the investment to make that happen.
And then your experience with these collaborative partnerships, if you like, I mean, any good, the bad, the ugly, anything you could call out on any of those that are kind of best practice, especially if there's startups in the room or scale-ups that are looking to really forge some of these collaborative partnerships? Be good. Any tips there?
Yeah, I've some observations and probably some war wounds that I've learned along the way is don't get lured by the filthy lucre if you're a fintech looking for your next round, and you might have a big shiny brand chasing you down because it's that they see you as the avenue to get there faster. You've got to really understand what's in it for both of you. Quite often some of these bigger organisations bring on board the shiny new toy and quite quickly dump them, don't nurture them, don't understand there's a different culture or a different sense of innovation that's come in, and it gets suffocated by bureaucracy and governance and so forth. So it's really about getting that balance right, both ways. So there is something in it for both sides. When you're in a startup world, you're trying to work out what your next payroll is going to be for your staff. Having that capital injection can be incredibly enticing, but quid pro quo from the bigger end of town, it can also be how do we get that plugged into our ecosystem, make sure that we're going to be first to market with whatever product or solution. So there is something in it for both sides, but you've got to be really clear on what your imperatives are right at the outset, I think.
Just moved on to the data piece and sort of the role and the power of data, which we talked about slightly earlier. We've got open banking, we've got the privacy concerns around open data. So how do you drive new products and services inside these quite complex large organisations as partners with all those overlays?
Look, again, not a silver bullet, and frankly I don't think many organisations have got it sorted yet. I think navigating it is going to be really key in terms of how you draw the insights out of data to inform the customers. But at the end of the day, I always find if you're looking at an end-to-end customer journey, you think about buying a house. Let's do a straw poll. Can we do a straw poll? Yeah. How many people have loved buying a house as an experience with their banking institution? Don't be shy. One. I have one buyer at the back there. You think about that journey, and when you start to think about buying a house, you go online, you go and have a look at the house, typically when you're not in COVID conditions. You go and do your application with your banking institution. You get everything right. You get your unconditional, or you get your conditional offer. You go and do your bid. And then you go through the actual transaction and your 100-point checks and all the rest of it. And how long does it take? It's full of friction. That is where data and driving that through a streamlined process, and I think, frankly, open banking has got a great opportunity around this. We'll really unleash it and provide enormous opportunities going forwards, but with the customer at the forefront in terms of what their experience is. So I think that's the big opportunity, and I think that's the opportunity for the fintech community specifically to solve for. One won't have all the answers, but it's the beauty of how it ties together, and I think that's a great foundation.
And that's just one asset class with a load of friction. There's plenty out there, and there's probably quite a few fintechs in this room solving for some of those friction points. Has anyone got a comment or question they'd like to make about that experience around the collaboration piece? If not, we'll continue on. So we're talking about collaboration and building platforms, you know, a platform to build the bank of the future. But, you know, we've talked about partnerships beforehand, you know, the 86400, we've got NAB 86400 Westpac with Afterpay, CBA, Klarna, etc. What does the bank of the future look like?
I think the bank of the future will be far more technology-led, and I think that's where they're really, a lot of banks and a lot of what I see in the sector more broadly, at all levels of banking, are really facing into that and are waking up to it. And then overlay that with a regulator who's, you know, driving far more rules and prescriptions, and, you know, rightly so, coming through COVID times and us all using our computers and that whole uplift in terms of using technology, that's driven a whole new world of, not a new world, but an amplified role of cybersecurity. So I think technology as the enabler is going to become even more of an important piece of banking, but then how you translate that into the data, the products, the solutions. But you've got to have your customer in the middle of it. And I think that's really going to be much more of that CX piece, product, evolution, innovation. Technology is going to be key.
So that, you know, the I mentioned at the start, that relationship we have our money is on this fundamental path of change, and what we have on our mobile phones day to day, you know, that's a benchmark for what we expect from our banks. And, you know, I envision a future not very far away where we've got these 24/7 platforms that the banks offer that offer everything from financial advice to being able to auto apply for a mortgage, transfer money everywhere. I mean, if they don't do that, then there's plenty of fintechs out there coming for them right now. So then that's the next question. Do we need to collaborate? There's a lot of really smart tech out there, and I can see the value for some of those companies for collaborating in specific areas. But if anyone who listened to perhaps the Afterpay conversation earlier this morning, they're certainly coming after more core banking infrastructure and products and services. Mind you, I would say there's still some work to do around regulation and oversight and what that looks like for some of these companies. So do we need to collaborate necessarily? What does it look
I
like?
believe we do, and I think collaboration will take different forms. And my observation is, in a more mature ecosystem, and, you know, we are working within that space, sometimes partners will become competitors, and we've got to be okay with that, because it's actually about what you do and you focus on in terms of some of those new products and solutions that you evolve. So I think that's okay, but I go back to my initial point, which is, but you've got to work out who you're going to get married to in the process, and whether you've got that alignment to make sure you're harnessing the broader network or the system with that true platform play. So platform's one thing, it can be the tech, but we liken it to being more about drawing on the network of our own solutions, but our partner network, and that's how we're working at Data Action on that partner play and platform play.
And then if you take this back up out of Australia, so and just have a look at our ecosystem right now about where we are vis-a-vis, say, the UK or European experience or the US experience in this regard. And I know you worked in the UK for a while. what does the future look like for us here? You know, how far are we behind? What do we need to do to catch up? What could we be doing better?
So that's a good question. I mean, I think Australia tends to lag about 5 or 6 years behind UK and US. I'm thinking of previous work life in e-commerce space. And we tend to take a bit longer, but when we get there, in terms of understanding what the value can be for customers, we're really quick to adopt. And we see that through smartphone technology as well, and often Australia and indeed New Zealand's used as a test case for a lot of the innovation. So reflecting that on open banking's been in the UK for about 5 years now. It's been fairly slow in its ramp up until the last year. And in the last year, I read a report recently where I think 25% of the banks have made at least 5 fintech partnerships or deals only in the last year alone, which shows you there's a ramp up, and it could be quite an exponential ramp up. And if we follow that trend, I think we'll get there faster. But it has to be understood in terms of where the value is from a consumer point of view. So go back to buying a house. If you could tie your whole identity checks, your utilities bills, your insurance, and all of that into a streamlined, frictionless experience, wouldn't that be great? Founded on your personal data, which, by the way, you could rent or lease to your financial institution potentially through open banking. I think that becomes pretty interesting and actually puts the customer right back in the centre again in terms of choice and control. I think we're going to look at it that way.
So C2C, not B2C2C. Has anyone got any questions they'd like to ask at this point before we have one final one? All right. So a quick little prediction on that ramp up. You don't have to name company names, but looking at that overseas experience where we've got enhanced collaboration, if you like, and there's things being done a bit differently. Where do you see, you know, aside from the 3 partnerships we've named right now, which are sort of big bulge bracket partnerships, where do you see links starting to be made and more collaboration happening in our Aussie ecosystem between startups and the larger corporates?
I think it will come down to, funnily enough, where the money lands as well. That'll also drive the big piece around that collaboration piece. But I think, to my point around the ecosystem and competition versus partnering, not everyone's going to have the full end-to-end suite or the end answer for everything. So just being real about that and understanding where those opportunities are, and it's got to be data-informed, is where I see it's going to be. So I think the models are going to continue to shift and look quite different. And I'm not about to crystal ball that today, I'm afraid, but we're going to have to use it as a watching brief and work with that.
On that note, I think our time is close to being up. So unless anyone's got a burning question, thank you for listening. Please thank Nicola.
I think we did have a few minutes. Does anyone have a question? I'll give it one last chance, otherwise might get an early mark for lunch. Cool.
Sorry, 3 more minutes, I didn't realise.
No, all good. You guys went through it so quickly.
Oh,
we've got a question.
Hey, Cathy. It's Mark from Seedspace. I've got a question around venture capital and early stage capital, particularly on the balance sheet for these startups that we're talking about. Do you see, with the quantitative easing and the printing of money, more access to funds in your world, particularly in the regional space?
Is that for me or for Nicola?
For both of you.
Do you want to try and give that a go? So, regionally, no. I think there's if I look at my lens, having spent the last 18 years in the UK, the angel investor ecosystem is really robust there, and that's because there's such a wealth of government support and programs for the whole ecosystem, for founders, for corporates, for investors. And as a result, you've got a very vibrant early stage investment culture there, which means you've got enormous wealth of companies tackling lots of things. So when open banking came, which was a bit earlier, when RTGS was opened up about 7-8 years ago in the UK, we had this flood of neobanks open banking, and we see TransferWise, now Wise, and Revolut, and all the brands you know now here embedded in the ecosystem. And I think we're a little way from that. our ecosystem here isn't as aggregated. It's very disaggregated, actually. Most people tend to invest in groups together with a trusted advisor or person, and I think that's something I think we really need to see improved, and we'd like to see some government help with that too, and I think that would be a real positive for the ecosystem if we can really boost that early stage investment and help our startups compete actually on the international stage. Did you have anything else?
Yeah, just to add, my observation of that is we're pretty immature in the innovation and the capital raising piece here, and that's why a lot of our great brains tend to go overseas. But I'm hoping that'll change with COVID times where we're forced to stay here and nurture and invest. And I think culturally it goes to sometimes we're a bit afraid or a bit cynical about failure, whereas particularly in the US it's celebrated. It's part of the journey as to how you get to be successful, and I think that's part of us growing up a bit as well and being okay with that. So that's just my 2 bobs worth.
Great. Well, thank you so much, Nicola and Cathy. It was great to understand more about how fintechs and larger organisations can partner to not necessarily be everything for everyone, but really provide those connected customer experiences that give them more choice and control. So it's now lunchtime, so feel free to head out the back. I think lunch will be available now. So we'll see you back here at 1 for the next session. Thanks, guys.